The economy is crashing. Interest rates are at an all-time high. The housing market is starting to collapse. What is going on with cryptocurrency? Bitcoin is near $17,000 and broke down below its resistance level at 21,000 and 18,000. What is going on in the markets? When is the bottom going to actually happen? How much longer is this recession going to happen? And how can you profit from this circumstance and from this economy? Welcome back to Brotherhood Finance. Yes, I know it's been a while. If you miss us, please make sure to leave a comment down below and smash the thumbs up button. The smash button and the like button is very imperative, so make sure to do that. And if you have not done, please check us out on our other social medias. And if you're new to Brotherhood Finance, we are a financial education company. We're here to help people learn how to achieve financial freedom. Stay tuned. Check out some of our other content. Let's dive into this right now. You need to learn what's going on, where the markets are at, how much lower they're going to go, and how you can profit from this. Furthermore, let's dive into this right now, brothers. First off, let's talk about the recession. Obviously, we were in a recession about 9 months to about a year and a half ago. Me and my partner, ColeNichter, and obviously me, Brendan, we called that we're going to go into an economic downturn. No one believed it. We time-stamped it. It's all way back on our YouTube channel. But besides the point, historically, the S&P 500 has fallen an average of about 29% around a recession, with a median drop of 24%. Now, again, a recession provides opportunity for growing a business. Again, the best time to invest is when everything is down, so you can buy low and sell high to increase your return on investment, as we preach. Now, Warren Buffett says, when stocks go down and you can get more for your money, people don't like them anymore. Again, it all goes back to psychology. You need to have the right mindset, and you need to know when to buy, when the dollar cost average, and when to get into these market conditions. Now, if we look around, again, 2008, 2009, about on average, the market dropped 56.8%. I think this recession is going to be very painful as well, so I do see a lot more pain ahead. And if you want to learn how to increase your return on investment, how to analyze stocks, how to buy cryptocurrency, what cryptocurrencies are our favorite at Brotherhood Finance, and how to get started in investing in real estate from an actual realtor in the Florida area, check out some of our courses at brotherhoodfinance.com. We also have great merchandise that you can use. Use code BCooper10 if you want a discount code. Furthermore, let's keep diving into this right now. Now, he said, Diamond said the S&P 500 could fall by another 20% easily from the current levels. Again, I believe there is a lot more pain ahead. We're going to see a lot of job losses in probably mid to late 2023. It's really going to start feeling like a recession during that time frame, in my opinion. Now, roughly right now, this is from October 12th. Obviously, we're now on November 11th, but around this time, the market was down about 25% this year. But again, the market's going to probably continue to go down and have a lot of pain. A lot of companies have a lot of debt. And just to put this in perspective for some additional information, we now have more credit card debt and more debt than we did in 2008. Yes, we have around $905 billion in credit card debt. And at the peak of the financial crisis in 2008, it was around $884 billion. Now, the U.S. economy will soon start losing 175,000 jobs a month, Bank of America warns. I kind of agree. And back in 2008, at the height of the Great Recession, Buffett wrote an opinion piece for the New York Times. He said, in short, bad news is an investor's best friend. It lets you buy a slice of America's future at a market down price. As we've seen, technology has continued to innovate over time. It's really the best time now to be able to buy low and sell high. I mean, the next 20 years, 15 years, time is our best asset. As you know, we're here and we're pretty young. It's the best time to get in is when there's blood in the streets. Now, just going back to kind of what some other CEOs are saying is 91% of CEOs are now actually bracing for a recession. So again, when big money, when big people and influencers and companies and owners are starting to say this, you need to know that that's quite alarming as well. Now, where are actual stocks at based off a price to earnings ratio or a PE ratio? As you can see right here, it's about 12.4 right now. Now, generally, you're looking at anything below around, 16 to 20 is about average. So, we're really already under, valuations are where they should be. So it's already, at a discount. So you can't really lose in the small caps. Now, as far as forward P ratios for mid caps and large caps, we're also pretty low. At large caps at 17.1, so still, a little further up there than mid caps and small caps. But mid caps are at 13.2. So there's already some great deals in the market. Now, interest rates. This is another problem. I've talked to a lot of people about the housing market. They still want to go buy a house. They're uncertain. And I tell them this, look, if you study the housing market in history, you need to understand two things. And it kind of goes back to supply and demand, but it's a different concept, okay? When the house price is very high and the interest rate is also very high, you have a problem. Normally throughout history, as you will see, interest rates will be extremely high, home prices will be extremely low. Now, if home prices are extremely high, and interest rates are very high, you have a problem. So you need to keep that into consideration. When you have that problem, like what happened in 2008, you're going to see a significant trend downwards in the housing market. We already called it. We actually did a video, me and the other owner. Go check it out. It's called Preparing for the Recession. Great video. We put a lot of knowledge and a lot of information in that one. Now, again, Powell, is facing political pressure as worries mount over the economy. You have to understand they've printed all this money. Gross domestic product is starting to hurt. We've been in hyperinflation for quite some time now. The Fed has to raise interest rates. They can't let money velocity continue to increase. They can't let inflation continue to go up. They have to get the dollar back under control. Ever since 1971, when President Nixon took the dollar off the gold standard, things have changed dramatically, and now it's really starting to get out of hand. And this is just adding more fuel to the fire. Now, what's happening with cryptocurrency? We've seen cryptocurrency slump. Again, Bitcoin is at $17,000. Ethereum is around, I think, 1,100. Solana got slammed. ADA Cardano got slammed. I'm no longer a fan of Cardano. If you want to go check that out, go check that out. But these cryptocurrencies really starting to get hit. I still believe cryptocurrency is going to be, the next digital dollar. I think we're going to transition into that way. I even believe the dollar may lose its reserve currency. I mean, it's what happened in Venezuela. Study anything in history, Romans, anything that happened. Eventually their currency just gets devalued. They get greedy, they print too much, and the currency kind of gets not completely wiped out, but it loses its purchasing power, and then another new reserve currency gets created. Hopefully it doesn't happen for the dollar. Hopefully I'm wrong, but it's not looking good for the dollar. I mean, obviously cash is king in a recession, and it's the best time to, kind of stack up cash and have liquidity on the side to be able to buy the dip as it continues to go down, which, just for my own opinions, I think this will probably drag out until late 24, and then I do think we'll have more of a bounce back early 25. We'll see how accurate that prediction is. Now, Crypto.com halts Solana USDC and USDC deposit withdrawals. And again, this is just a chart of Bitcoin trading around $16,000. Again, if you look right here, you need to look once we broke below, the 20,000, 21,000, we go back down, and then we need to hold. If we drop below the 17,500, 18,000, there's not much more resistance for quite some time. So just keep that in mind as well. Again, it's the cycles. You need to understand the cycles of cryptocurrency. Crypto is a very volatile speculative asset. So in times of rough times, it's going to go down quite more significantly than the stock market, but this is going to create a great buying opportunity for people that know crypto is innovative. It's the next technology, much like the internet of the 1980s. And I don't see crypto honestly going anywhere. I think it's just going to continue to be implemented into businesses and into the financial marketplace. Now, why is crypto getting hit super hard? As a result of corporate due diligence, as well as latest news reports regarding mishandled customer funds and alleged U.S. agency investigations, we have decided that we not pursue the potential acquisition of FTX. Again, Binance was, going to get involved with FTX, and that fell through. So that's another reason why not only FTX, but the cryptocurrency space and Bitcoin are getting hit substantially. Besides for all of the, economic problems that are occurring as well. Now, when could the Fed slow interest rates? The Fed could slow in December, but then still get to the 6% in our forecast. But a sustained market rally risks undergoing the Fed's work of slowing down the economy, which we already know. If you kind of look right here, again, home prices, talking about homes. Home prices have, decelerated sharply, but valuations still remain high. This is what I was just addressing earlier. Okay, when you have high interest rates, the home prices should be low. And when you have low interest rates, the home prices, technically should be high. But when both are high, you run into a problem. The economy is moderating quite slowly, as we stated, as a rating of the 79.5 seasonally adjusted index in near April 2020 lows and back to levels seen following the burst of the housing bubble in 2008 to 2010. Now again, the housing market, we have seen quite a decline start to occur. This is in Tampa, Florida right now. This is a start date from 10/3 to 10/30, and as you can see, the home prices dropped 3.8%, which is already starting to decline, but you can kind of see the tick downward. I do believe there's going to be more pain ahead. And Redfin weekly housing market data, as you can see here, percent of active listings with price drops in all Redfin metros. Look at that big black line increase right there over the last 4 weeks. So again, home prices are starting to decline. Again, as far as homes go, you need to keep in mind that the best time to really would be to buy a home would be wait for the house to go down in price. So it's probably going to drop anywhere from 30 to 40%. In my opinion, probably around 30%. Because again, home prices are extremely overvalued right now. And then you want to wait for interest rates to, where home prices are kind of like right here. So they went down and interest rates are maybe a little above. Above that for, a good equilibrium, or they start to come down and they're a little lower. That way you really get a great buy. Depends on how much liquidity or cash that you have. Obviously, the more cash you have, you don't care much about the interest rate, and you might be able to buy a little sooner before the Fed continues to lower rates when home prices drop about 30%. But it really depends on the individual. Make sure you're building your credit. Make sure you're able to, invest correctly and appropriately. If you want to check out what stocks we like, what crypto we like, the courses that we offer, it's all at brotherhoodfinance.com, and there's a lot of content on our TikTok at Brotherhood Finance, on our Instagram, and obviously on our YouTube channel. We also have a Discord. If you have any questions, join that or become a member. If you enjoyed today's video and you want to know more about what's going on in the economy, let me know. And please leave some recommendations down below. Smash the thumbs up button. Subscribe to our YouTube channel. Much love as always. Thank you for being a part of the Brotherhood. We will be back again with weekly uploads, so stay tuned for that. Have a great rest of your week, a great rest of your weekend. Appreciate it as always. Peace out, brothers. This is Brendan. Peace.